Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for November 17th, 2019. I hope you guys are having a great weekend and I'm excited to bring you this week's week ahead video. Now before I get started, let's just go ahead and mention this. If you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. $1 for 10 days. That's it. And you can try it out. And when you're trying it out, make sure you download the mobile app. The mobile app is available via the App Store, Google Play Store. This way you have all of our analysis, the push notifications, every time we update, every time a support resistance level is breached, whenever there's breaking news, you can have all that analysis right at your fingertips when you're on the go. And remember, when you're using ForexAnalytix, there are two tiers of ForexAnalytix. There's the premium version, which is $119 per month if you want to go month to month, which is, what some people do. Or you can do semi-annual or annual subscriptions if you want to save a little bit of money. But also we have our light version, and our light version doesn't include some of the advanced technical analysis, and it doesn't include our members chat room, but you still have the app, you still have all the basic technical analysis, the notifications. So make sure you try us out. Like I said, it's $1 for 10 days, and when you try it out, you get the premium version when you're trying it out. So it doesn't matter if you're going to use the light version in the future. All right. Okay. So let's talk about, well, first and foremost, let me remove this or just move the data flash here. That's the, if you're using the light version or the full version, this is, this data flash actually shows you what the economic data release is at the moment it's released. It's not quite as fast as Bloomberg, but within milliseconds of Bloomberg, which is pretty darn good for, even if you're using our light version, you're paying $19 a month and you get these news releases when they come out. It's worth its weight in gold. Okay, this is the actual platform. Now, before I talk about the FX market and what is in store for this next week, I have to address the elephant in the room. Okay, and that is obviously stocks closing at all-time highs. And what I thought I'd do for you today, we have analysis on the S&P here, and if, like, let's see, you want to do basic technical analysis and you want to see all the most recent analysis of the market and where we're going, you can use the analysis on ForexAnalytix. It hasn't been updated for the weekend because my team's putting together the analysis as we speak, but I'm going to do analysis personally for you on the S&P. Now, the what you follow is, and what most of us follow is like the S&P futures or a CFD type of instrument that gives you the moves when the futures are moving overnight, not so much the cash movement. But I actually wanted to use the index itself, so you can see what stock traders are seeing. People that actually trade the equity markets when the markets open versus when they close, kind of what they're seeing. And what you'll notice here, first and foremost, is you're going to see this gap higher on Friday, and we closed at all-time highs in the S&P, right? Everything's good, correct? Sure. I mean, if you take like the last big move of the end of year last year, excuse my allergies, by the way, if I sound a little nasally, it's because my allergies are really affecting me today. So just bear with me. I'm sorry about that. Just started really this morning. So anyway, you can see the extension of the 127% extension as we're, rallying, and you can see the RSI popped out, into overbought territory, which is a little bit of a concern as a whole, because this is where relative strength, not excluding this big breakout over here, relative strength has really been capped, since, summer of last year at these levels. And so as you can see, we're reaching into levels that would be a little concerning from an overbought standpoint. Now, we broke out, though. The point I want to make here is we broke out. Now, one of the reasons why this was a significant breakout, in my opinion, is that we also have an extension. Let's see here. Now, this is magnetized, so you're going to, whoops, that's not the one I wanted to do. This move right here, this last consolidation, take the high here to the low. Okay, there's another 127% extension. And then if you take this high let me go to this low, there's 161% extension. So you have a 161% extension, 127% extension, 127% extension, big confluence. You can see it right here. Big, let me draw this out, confluence of resistance, and we broke it on Friday. Yay, right? Right, yeah, it's a breakout. It's a breakout. Well, one of the other things that you have to look at here, let me delete this, is take the last move. This is the very last move that we had down, and that would be for this fall, right? Whoops, that's not what I want to do. Grab the fib, and you'll notice that we actually are at, or within, a couple points of the 161% extension of this last move. Now, it's important just because there you can see that we're challenging, even though we broke that big fib confluence. There's one last fib, the golden fib here, that we're extending into, that I think is going to be rather significant. The reason why I think this is significant is not necessarily what's happening in the S&P. The S&P is, the reason why I look at the S&P versus the Dow or the Nasdaq is this is, the 500 top U.S. based companies is the biggest, broadest index that we have, which I would assume is going to be the most important to be watching. Now, obviously, other traders, especially traders that are more interested in individual equities, they might look at the Dow or the Nasdaq and look at the divergences between all those. We just don't have enough time today to hammer through all those charts. We can look at them on the Face webinar come tomorrow morning or Monday morning if you want. You guys can just let me know. We can go through all those other indexes as well. But I wanted to use the broad-based index. But the reason why this is relatively important to me is because what I've been watching is the bond market, and specifically the 10-year. Okay, one of the things that had gotten my attention a couple of weeks ago, and let me remove this. One of the things that got my attention a couple of weeks ago, or last week, excuse me, was the breakdown in the 10-year. And I believe, if I'm not mistaken, I mentioned it on the week ahead video last week, but I don't go back and watch my own videos. You ever listen to yourself on video? It's like fingernails on a chalkboard. I can't do it. I have to go by memory. I'm like, I think I talked about the 10-year. I know I talked about it on the Face webinars for sure, but I talked about it last week. Not 100% sure, but I made point of it in the analysis on the ForexAnalytix platform that we were breaking this, year long. We broke this year-long trend line, and that was significant. Well, this week we broke back above the trend line, and we're basically trading at it. Now, that to me signals that there could be a false breakdown in bonds, so a false rally in yields. Now, why would, and the question I always ask myself is, why would yields be going down as equities are going up? Typically, if things were so great, yields would be going up as well. But that's not necessarily the case. So what I'm really focused on at this point in time, to be looking at the equity markets to see if they're going to follow through to the upside or not, is this is the 38% retracement. You can see it right here. If you can take this high to low, and it's already drawn out, but you can see this high to low. We've been capped, and we were capped on, this was Thursday of last week. We were capped at the 38% retracement on the bond market. We're consolidating. There's an inside day on Friday. Again, we rallied to new highs. It makes sense that, bonds came off a little bit, yields rallied a little bit, but did they really rally? Did they really? They consolidated, and I think they stabilized. From falling further, yields. But what happens if, let me get this, I had to get rid of the magnet off of that line. What happens if we break this 38% retracement, we break this trend line, and we continue to rally and yields go down? Well, this to me may signal that equities are ready to roll over, because we're at, well, yeah, I mean, there's several reasons why the stock market could roll over, but technically we hit that 161% extension of the S&P. Now this is the CFD, but let me take you back over to the SPX. Here's the index that we're just referencing. So we're here at the 161% extension, and then if you have yields that start to sell off, bonds start to rally, that's significant to me. Now, one of the currencies that I've been following a lot, and I know those of you that are have been watching it quite a bit, is this dollar yen, which the dollar yen last week we broke this ascending wedge. We broke lower, kind of posted a false breakdown, but it's still an inside day, right? This is still, you take a look at the, let me actually pull up a chart that I haven't drawn on as much. Okay, delete that, delete this, and we're challenging like the 50% retracement. We're still below the 200-day moving average in the dollar yen, and this is like an inside day candle, right? So I'm not completely convinced that we're reversing here. If this was a bullish outside day, meaning that this entire candle was outside of the the move of the previous day, or if it was an engulfing candle, I would be singing a different tune. I would be saying, wow, you got to watch this dollar yen, looks like we're going to rally to new highs. But I'm not 100% convinced about that. So what I'm going to be watching going into this next week is if yields start to sell off, showing you that, going back to the 10-year, showing you that bonds are rallying. And if the stock market looks like it's stalling up here at these new highs that we posted on Friday, then this dollar yen is a short, meaning we're really going to start selling off. I won't get super excited about the dollar yen and all the other yen pairs until we start breaking lower lows, because right now, I mean, if you look at the just basic construction of the chart, we are, for the most part, making higher lows and higher highs. The rate of the highs is not as great as the rate of the lows, which that's why we have an ascending wedge. Now, if we start printing lower lows, that means we break below, let's say, roughly 108. That's going to be a pretty bearish event and development for the US dollar Japanese yen, which already is in a very tight consolidation. And for those of us that follow correlations, the fact of the matter is the dollar yen has not been rallying with equities going to new highs, which poses a big risk for the US dollar Japanese yen longs if equities actually start to come down. We haven't seen how the FX market is going to respond in a risk-off environment. Not recently, right? We haven't. I mean, but if you go like this, you go SPX, and let's go back over to the index that we were talking about earlier, and let's just compare it. Let's add the US dollar Japanese yen. What we have seen is like in sell-offs in equities, like I'll just use this box here. Sell-off in equities. What happened to the yen? Sold off. Okay. Sell-off in equities. What happened to the yen? Sell-off in yen. Okay. Sell-off in equities. What happened to the yen? Sell-off in yen. So if we have a sell-off in equities, what happens here? My assumption is here, because we haven't been able to follow equities higher. So when equities sell off, we're going to see yen strength. right? And that's why I have to watch the bond market. We have to watch the bond market very carefully because, you know, if and this is the 10-year bond market. This is the dollar yen, right? If bonds go up, that means yields are going down. One of the strongest correlations here is the dollar yen would go down. You notice how this is all mirror, right? This is a mirror. This what I'm trying to point out here is this is the dollar yen, the orange line. These are bonds, the candlestick chart. So if bonds rally, yields are going down. If yields are going down, the dollar yen is going down. So this is very significant. As stocks are reaching highs, the dollar yen isn't rallying. That's got to be very significant going into this next week. And that's why when you're trading this next week, and I'm going to go back to that S&P chart in one moment. When you're following the S&P, you're following bonds, you're following the dollar yen, you really got to be following these yen pairs. You take currency pairs like, the Aussie yen, you know, the Aussie yen is in an ascending wedge. We're at wedge support. Yeah, we respected on Friday because stocks hit all-time highs. Well, of course, the Aussie yen is going to bounce off that support. What happens if the Aussie yen breaks down? Equities are breaking down or reversing. This Aussie yen is going to get crushed, especially on, a non-China U.S. agreement, which I'll come back to here in just a minute. The euro yen, massive, massive failure at 121. I mean, we were just could not break higher. I was thinking for sure, this is me early last week, I was thinking, man, equities are going higher. This euro yen is gonna break out. It's got it. And I was patiently waiting for a break. I was waiting for a break above this 200-day moving average, this blue line here. It never happened. What happens if stocks actually go down? The euro yen's probably going to go down as well. Okay. Now, you guys are probably going, well, Blake, we're at all-time highs, so why are stocks going to go down? I did tweet something today, which got my attention over the weekend. Let me delete. I don't want to delete all that stuff. I want to get rid of this. Screw it. I can do it later. Let me go back. Let me go back over to the S&P real quick. Okay, S&P that we were drawing on. So here's the S&P. I'm going to delete everything, and then let me delete this. Okay. So we're going back to the S&P index that all stock traders are following. This is the bar starts when the stock market opens in New York trading on Monday morning. Over the weekend, or today actually, I was reading all the news on China, and I thought was really interesting, and I tweeted about it that China is reporting that their vice premier Lu or Li Lu Li Lu Li he held a phone conversation at the request of Lighthizer, our U.S. trade representative, and Treasury Secretary Mnuchin on Saturday morning. Wait a second, Donald Trump and their administration has been saying, "Hey, we're almost there. China wants a deal," and the market's been rallying based on the basically the green light that we're getting from whether it's Donald Trump's advisor Larry Kudlow, or Lighthizer, or Donald Trump himself, that we're almost done and China really wants a deal. Well, why are they requesting calls with China? Why isn't China saying, beating down our doors, saying, no, no, let's get this done. We need, I don't know if we're as close to doing a deal as we're led on to believe, or if China's even going to, bend the knee here. And so if there are murmurings between now and the time the equity markets open, there's a point to this whole, talk here, that, the talks between China and U.S. are not really going as well as we all in equity market land believe. What happens if the S&P, for example, and this is not very far. Let me just point this out. We closed at 3120 in the S&P. What happens if we open at 3100, which is down 20 points, which is just a I mean, if you think about from a percentage point of view, we open down 0.5%. What if we open down 0.5%, and then the stock market opens, and I'm just going to use a line here. The stock market opens and it's a red day, and we open up and the market opens and we move down for the day. And I'm just pretending this is a candle. Do you know what this is? It's a abandoned baby, isn't it? Is that what they call? I forget what the name of it is, but what it basically does is it leaves all the buyers stuck on Friday that bought on Friday, and if we end up gapping down on Monday and then moving lower throughout the course of the day, that's or an island reversal. Whenever the market gaps higher and then the next day it gaps lower and then reverses, that's like probably one of the biggest reversal signals from a candlestick perspective that you're going to find. They're like tweezer tops, they're bearish engulfing. Then there's island reversals. It's because you're stuck on this island, all the buyers, and you're left on an island. Then what usually happens is the following sessions you see something that looks like that. you know. And when you get these island reversals, it's a big deal because I'm scouring the news this morning when I got up, and I'm thinking, there's got to there's got to be positive news coming out of the China-U.S. trade talks. Like, we've got to be getting it, based on the price action that we saw on Friday. There's got to be something. But how about if there's not? And how about if things just kind of unravel? Well, we got a little bit of a technical problem here in the S&P. So it's just something that I really wanted to talk about with you guys today, and what are going to be the implications in the currency market moving forward. Again, I think we need to really pay very close attention to the yen. Now, you notice I didn't talk a lot about the euro or the Aussie or the dollar index as a whole. That's just because I think we're a little range bound. I do still think that the dollar is vulnerable. I think the euro, may be more of a range between the 110 and 112, maybe 113 level. I don't think it's going very far, not at this stage in the game. However, this next week we do have the new ECB president, Christine Lagarde, is speaking on Friday. This might mark her first public appearance talking about monetary policy, because she's due to speak at the European Banking Congress in Frankfurt, Germany. So that's going to be on Friday. So we might actually start to see some euro volatility. On top of that, we have German manufacturing and service PMIs that are being released on Friday of this next week. Other than that, there are other things happening this next week, but our U.S. economic calendar is fairly light this next week. We do have the FOMC meeting minutes on Wednesday. We have, like, Australia has their monetary meeting minutes Tuesday morning or Monday night if you live in the United States. Canada's got some data with CPI data on Wednesday, and then also Canadian retail sales on Friday. So there are some things that are happening in the FX market, but it's a fairly weak economic calendar going into this next week. So I think the attention is going to be on the U.S.-China trade negotiations and how those are shaping up. But I want you guys to be careful, because I'm a little skeptical of where the S&P is right now and what bonds and yen are doing as a whole. So therefore, be on your toes next week, guys. Just be really careful. And if you want, an update every day on how I'm feeling about the state of the market, make sure you tune into our free live webinars, the FACE webinar, because I'm there every day. The rest of my team, plenty of members from my team, or our team, I should say, is on there. Dale Pinkert does great interviews, and he hosts the webinar. He's with us every day, and so there's always great content. You can kind of feel me out in my tone as we as trading evolves throughout the course of the week. And guys, if you feel that this video has been beneficial to you and you feel it's going to be beneficial for you going into this next week, or you like the videos that we provide each and every week, please give us a thumbs up on YouTube. Make sure you subscribe to the channel so you don't miss any of our content when we release it throughout the course of the week, because we release videos every single day. And if you want to be notified, you can click the bell icon while you're on YouTube, and it'll send you notifications, whether it's email or pop-up notifications every time we release a video. So make sure you do that, and it makes us feel good that you like the videos. Click that little thumbs up button. That's always great. But guys and gals, enjoy the rest of your Sunday. My name is Blake Morrow with ForexAnalytix. I hope you have a wonderful week of trading, and I'll see you next week if I don't see you on the Face webinars tomorrow. All right, have a great one. Thanks.